Welcome back, SF Live. I'm the EdJR Mining Guy on Twitter, and we're going to talk about where gold is heading in the next 12 months. I heard a price forecast. We're going to get to the bottom of it. Wonder what you think about it. $3,000 by the end of the year. Something my guest said on a panel this morning here at the Vancouver Resource Conference, and we're going to get to the bottom of it. What's driving the price? Should we be investing in gold right now? Does it even make sense? What should we do with it? Should we buy mining stocks? Lots and lots to talk about. We had a hard time narrowing down topics just before hitting the record button, but I'm really excited to have now Lynette Zang with me over at the studio. I just have to switch cameras. There we go. And Lynette, thank you so much for coming on. It's a great pleasure. Been wanting to interview for a while.
Well, I'm so happy to be here, Kai. Thank you so much for having me.
Yeah, great. Jay put a great show on, so I'm really, really happy that
yes, he did.
Quality people come
Absolutely.
out to the conference. Like, this is probably the best lineup of speakers that I've seen in a long, long time here, and you're part of it. So,
I know. I was very happy when he invited me. I was very excited to be here. I hope he has me back again.
Oh, absolutely. Yeah, he does great content. But Lynette, like ITM Trading, give me a quick 20-second rundown. What do you do? Just to establish a bit of profile, and then we'll dive into some of the topics.
Absolutely. ITM Trading is a full-service physical gold and silver dealer. So we are like the middleman, and we send the gold to you. So you hold it, you own it outright, and it runs no counterparty risk, which should be a part of everybody's portfolio because gold and silver is actually real money.
Absolutely. It's an interesting topic. I like following the flows a little bit and see what's going on. Like, who's buying right now? Like, if you talk about it, like, I find that really interesting. Where's the interest coming from?
You know what I find really interesting? Number one, the central bankers have bought more gold through the third quarter of last year of 2022 than in the last 57 years. But they actually started accumulating in 2005 before the great financial crisis hit in 2007. So you can see that on the charts and the graphs. So certainly global central bankers are huge buyers. But we're also seeing a lot of front running by the 1%, those that are in the know. And we know that by looking at, in the numismatic world, the ultra rarities, which run in the many millions of dollars for an ounce of gold. And that had a breakout few months ago, several months ago, and has been climbing higher and higher. So, you know, I think people that can afford $15 million for a coin, they could write the rules, or they could certainly influence those that write the rules. And I think they know what's happening to our monetary system.
Absolutely. Did you also look at silver? I have to ask that question. This is the first time we're meeting, so I'm just making sure.
Absolutely. Silver is the secondary monetary metal. Gold is the primary currency metal. So yes, both of those.
Because I find it interesting, like silver, I've just sidetracked, tangent. The OEMs in the car space or chip manufacturers feels like they're coming downstream or upstream in that matter. They're looking at the sources where the supply comes from. And silver, I had an interesting conversation with one of your competitors, probably, out there about like Elon Musk looking into silver. So
Absolutely.
that's why it's like, I find it interesting, like where the interest is coming. That's why my buy question about gold as well. Like, you know, there are different flows or different investors at the table for silver.
Absolutely. But the difference between the two is that silver gets used up. You can recover all of the gold. And since for me, this is a currency life cycle issue, then the primary currency metal is gold. And that's what they actually reset against. So where you mentioned $3,000 this year, we have a lot of things coming up this year. But ultimately, when all confidence in the currency is lost and we are in a hyperinflationary state, the true price of gold in terms of the fiat money, so the government-based money, is really somewhere north of $15,000 an ounce.
Yeah, it's like I was going to ask you, because you mentioned if there's a debasement happening or the US dollar, let's assume it disappears. Like, how would you value the gold an ounce? Like, how would you trade against it? Like, how would you set its value? You said $15,000 dollars again. So what would you, like, is it three loaves of bread, 50 loaves of bread? I'm exaggerating.
Well, actually, you're not really exaggerating that much, because back around 1913, A 20th of an ounce of gold, which is what backed the dollar bill, would buy you 11 loaves of bread. I did an event in October and we recalculated it, and that same $1 gold coin would buy you 133 loaves of bread, right? So there are repeatable patterns, but why did I say 15,000? I am a very strong believer that in order to make educated choices, people need to understand the fundamental or the true value of, frankly, any asset or any instrument. And there could be a little bit of nuance in there, but since gold is the primary currency metal, okay, you take all the gold that exists in the world and even the gold that we know of that is yet in the ground. The current monetary system is based upon debt. That's how money's created. So you just take all the debt that's been created, not just in the US, because it would be much higher if we just looked at the US currency, but if we look at it globally, and you can even make your life easy and go to the global debt clock. And if you divide the debt, since that's the money, and by the amount of gold, it gets you somewhere north of 15,000 right now.
Wow.
So when all confidence in the currency is lost, that means we're in a hyperinflationary state. And we know what they do is they do that overnight revaluation. And they take the currency that has no intrinsic value and they revalue it against gold, which is all intrinsic value. Because both gold and silver are used in every single sector of the global economy. So they have the broadest base of functionality and therefore the broadest base of buyer.
Interesting statement. Like a lot to digest in there as well, right? So,
yes, there is.
My head is spinning a bit. It's been also been a busy day at the conference already. But you brought up currency debasement, and I'm thinking when we're having these discussions, we cannot talk about it without talking about China. What is happening in the East? They're buying, central bank buying a lot of gold. Obviously.
Absolutely.
Can you fill us in a bit? Like, what's your view on what China is up to? What could be there? Like, what's your interpretation of what we're being, sort of fed in the news, and what we have to make? Like, what's the picture you're putting together?
Well, China's really an interesting country, and they've really been front running the surveillance economy, right? And they have huge control over their population through, many means. But regarding specifically gold, I mean, nobody really knows how much gold China's been accumulating. And remember, it was 2006, I believe, where they actually allowed their citizens to buy gold again through their banks. So they're buying the gold, they're holding them at the banks, which is actually pretty darn easy for the government to confiscate, right? But the reality is since gold is good money and runs no counterparty risk, that whoever holds gold retains freedom, retains choices, and retains power. And we've been watching a shift of power from the West, from the US, to the East, to China. So, China's accumulating massive amounts of gold and have been encouraging their citizens to do it. So it is highly likely that they will end up with the most gold and therefore the most power and control.
Like, if you believe the official statistics, they already have the most gold.
Right.
So, like, do you think an attack on the US dollar, like, I keep coming back US dollar, by the way, it seems to be the overall influencing currency and anything. Everything's US based anyway. We talk every day about what the Fed might do. And there's a currency war out there.
Oh, absolutely.
Well, right? So as soon as the US monetized or weaponized the SWIFT system, that's when sort of, for lack of a better term, I think we can say it once because on YouTube, shit hit the fan.
Right.
Okay. That's where things sort of changed. I think that's when Russia got more aggressive. That's when China got more aggressive, more saber rattling, and deals with Saudi Arabia are being constructed. So
absolutely.
I'm coming to the petrodollar
100%.
versus petro yuan, right? So
exactly.
Are we going to keep pricing gold in US dollars in the future, or will we have to price it in yuan
Well,
in the future?
I think we're probably going to price it in SDRs in the future, actually. And that's the IMF, the International Monetary Fund's currency that they created in 1969. And that's a basket of currencies. And you see, the reason why everything is US dollar centric is because we have the official title of world reserve currency, which basically means that if you're a government or a corporation, and certainly an individual, going outside of your borders, you had no other alternative but to use dollars to buy oil, lumber, medicine, everything. But it was already the end of 2000 when the Federal Reserve started to buy back U.S. Treasuries. So these things, even though they kind of seem like they happen overnight because you're not really paying attention, it really happens over a long period. It happens slowly until it happens fast, right? Yeah. And we're at the point now where it very well could happen fast because Saudi Arabia is talking about, and we've already seen this as well, accepting other currencies for oil. And after all, who's the plus in the OPEC plus? Russia. Yeah. So, and no currency, a lot of currencies have been the world reserve currency over time, and they've all lost that status. So we're at the end. And the reason why I think it will be the SDR is because it's been around for so long. Everybody has a bunch of it. They've been issuing massive amounts to different countries recently. And it's a basket of currency that could include every currency in the world. So they don't have to reinvent the wheel. They just have to tweak the one that's frankly already in place. And I think we'll end up with local currencies in the country, but the global currency is most likely, in my opinion, we'll see, to be the SDR because it's already established and it's easy.
Like I interviewed Alistair McLeod a few weeks ago. You probably know him, also analyst over at Gold Money. Very, very interesting guy. And yes, he made me think like talking about the Fed interest rate hikes is sort of like, I came out of the conversation thinking like, why are we talking about this? This is almost meaningless. And I'm bringing it up because we got Fed meeting this week and everybody's looking towards what they're doing and what they're signaling. We have to talk about it. Like, although I'm like, if you look broader, why do we?
Exactly.
Right?
Yes, but when we're looking in a really narrow place, there is still a high level of influence over the markets. However, this whole system is a con. It's a huge con. And every con game requires confidence. So as I've been watching over the years, it was 2015 when, and keep in mind too, at the IMF, almost every country in the world, that's the Treasury Secretary and the central bank chief, is part of the IMF. So they all get together and have conversations regularly. And for a while, we saw a lot of cooperation between the central banks. But in 2015, the Swiss central bank had vowed to retain a peg to the euro dollar. And there's a whole lot that goes into it. We don't have that much time. But, and they kept vowing that it was like the most important thing. And then 2 days after they came out with this big vow, boom, they broke that vow and they depegged from the euro. So the central banks lost confidence in each other because they now knew that every central bank will do what's in their best interest first, regardless of what anybody wants. But it still had the market and it still has the public until last August. And I got to tell you, this really, really surprised me. And I think indicated as well how close we are to the next crisis. Because in August, the central banks had been vowing to raise rates 50 basis points, and forward guidance telling Wall Street what they were going to do so they could get into position to benefit from it was a key tool that they've used since 2008, right? And so they kept promising it. And then what they do, they came out with a 75 basis point raise. So what did the central banks just show Wall Street? You can't trust us. We're going to do what's in our best interest first. And that's a big deal that they gave that confidence level away. So there's only one more level of confidence left. And that's the public having confidence in the currencies. And this rapid inflation erodes that confidence because it reveals the con game when the currencies are losing value that quickly. They can do it slowly. We have what the central banks define as financial stability. Now, you and I hear that, and what do we think? Well, that means prices are going to stay the same. They're going to be stable. No, no, no. It is the activity of the public, right? So if inflation is at a low level, say 2%, then the public doesn't ask for a raise. They don't have a problem. They don't change their spending patterns. That's the price stability that the central banks are seeking, which is why they have to raise unemployment. Because God forbid, the general workers should make more money. It's okay if the CEOs do. That doesn't somehow feed into inflation, even they're paying these guys millions and millions of dollars. Yeah, that doesn't impact inflation. No. But, you know, a regular worker asking for a few bucks more an hour, yes, we've got to stop that puppy.
Big no-no. No, it was like interesting that you brought the level of confidence by the consumer, because they've been sneaking one past us.
Yes.
And not just one. Okay, maybe that's an understatement of the century. Mm-hmm. But the U.S. dollar debasement, the value of the U.S. dollar, like it's down 92% since it unpegged from the from gold.
Yes.
92%.
Yes.
Is an extremely high 90s number.
Yeah. Well, it is. There's just a little bit more than 3 cents on the dollar. But you see, when they created this system, they knew two things. They knew more than this, but two key things. Number one, they know that people marry the legal money of the state. So when they're going to make these transitions, they need to keep it looking as normal as possible. Okay? And number two, they know that not one man in a million understands inflation, because inflation causes nominal confusion. And here's nominal confusion. You had a $20 bill 10 years ago. You have a $20 bill today. Nominally, they're identical. But what that would buy 10 years ago, heck, what that would buy 6 months ago, and what it buys today, vastly different. So yes, they've been pulling this, by design. People do not realize, but inflation is actually an invisible tax that governments do not need to go back to through legislation and make it visible. And for corporations, the inflation has enabled that income and wealth inequality. Because back in 71, the average income was like $9,500. And a family of four could live reasonably comfortably. I'm not saying they were super wealthy, but they could be comfortable with one wage. Today, I think the average wage is something like $67,000, and you need two people making that, and they're living paycheck to paycheck. So, yeah.
No, there's disparity. There's a lot of disparity.
Right.
How do you see the next 12 months playing out? Suppose we got the end goal, let's say it's $3,000. The question is, how are we going to get there? Like, map it out for us.
Well, okay. I never give dates unless the central banks give me dates, right? And they have given us a date, and I don't think we have time to go into this, but you can find this on my YouTube channel. In the Great Financial Crisis, it was discovered that the LIBOR, London Interbank Offer Rate, was being manipulated by Wall Street. Oh, shocker. Okay. So then they had to once that was leaked, then they had to come up with a new interest rate benchmark. But every contract since the 80s have been written, so mortgages, credit cards, auto loans, student loans, as well as derivative bets, have been written with LIBOR embedded in it. Well, LIBOR is going away on June 30th of 2023. And the most current data that I've seen on it is that there are still roughly $610 trillion in notional value, which means nobody knows the value at risk, of contracts that still have to transition into that new benchmark. So I personally think there will be some kind of crisis, and I could be wrong, and I hope I am, but I don't think I am, because this has never been done historically, ever. So I think there's going to be some kind of crisis that happens before that to justify lots of stuff, but cover up this transition. Because they tried it with 80 trillion, I believe it was October 2019, and it was a big, fat fail. And you know that because it went dead silent on it after they announced it. And then about 3 weeks after the test, they postponed the transition from 2021 to 2023. So I think that next upcoming crisis within the next 6 months-ish, give or take, okay, is going to definitely drive people to the safety of gold and silver. But yeah. Right, both the monetary metals.
It's a great segue, actually, talking about now, because we're here at a mining conference. Right?
Yes.
So gold, silver, obviously. Like, do you dabble in the mining stocks at all? Like, I have to ask it as part of the mix.
At this point, the answer is no, because they can create, the people marry numbers, right? Yeah. So even when they create an illusion of something going up, the real trend is in the purchasing power. Doesn't matter how many digits or pieces of paper you have. It matters what you can convert it into. So this has certainly not always been true. And in the future, that will not, I assume it will not be true. But at the moment, I am, other than some cash, I am an all tangible gal.
Yeah, all tangible. You gave me so many great YouTube titles already. Like, I was like, it's awesome. I was like mentally making notes. Like, I should be using this and should be using that. Fantastic. Crap, now I gotta make a cut. I had an amazing question lined up for you just now. Yeah. Lynette, based on what you just said, like, it sounds like you're the creator of that one meme where the little girl goes to the bullion store, says, ha ha ha, I gave him fake money, they gave me real money.
Yes.
Did you create that one?
No.
But you know
I should have, but I know exactly what. Yes. Yeah. I mean, what is this? Okay. I mean, this is so easy for them to do.
Yeah.
And unlimited amounts. And every time they do that, the value of what's already out there goes down.
Yeah.
So, yeah, my money gun.
Yeah. Absolutely, yeah. We'll just
let's play central bank.
Yeah.
Out of money. Don't you wish that would happen to them?
More.
Yeah.
I'll give you the
push
printer
a button.
code. Like, I'll give you the printer code. We'll just create some more.
Yeah, absolutely. That's easy enough. And hey, wait till we're in CBDCs, central bank digital currencies, right? That's a button push. And I don't know if you've read their papers on how they're going to manage this. But central banks, they say, once we go completely digital, we've got a CBDC, even if there's still cash out there, there will be no limits on how low they can push interest rates. And they intend to have their finger on the button constantly. Because right now, when they create policy, it takes like 18 months for it to run through the system for them to see if they got what they want. But you mentioned earlier about the purchasing power, right? There's only 3 cents left. So, and the key tool that they use are interest rates, which also just had a massive breakout, which indicates a lot of change is afoot, pattern shift. But typically, since the early 80s, when they pushed interest rates intraday up to 21.5, every time we've gone into a recession, they've dropped interest rates 5.5%, 5.75%. That stimulated borrowing and spending. But can we do that now? They've been anchored at 0 since 2009. And yes, they're pushing rates up so they can lower them again. So they're creating this next crisis between their money printing and the interest rates. They're out of tools, and they have to attack your principal, which is what negative rates are all about.
was going to wrap up the interview just before our last question, but now you gave me another food for thought moment here, because you brought up CBDCs, which is a whole different topic.
There's so many things going on these days.
It's crazy. But you brought up the June date.
Yes.
Right?
Yeah.
So, and I've had a conversation with somebody else, I think yesterday or the day before, talking about CBDCs, and he thinks they're being introduced officially this summer.
That would make sense.
So, do you see a combination there? Would that make sense? Because we need a crash, a crisis, to sort of introduce something new.
Well, I have to tell you, I was getting ready to retire before 2008. And I was in a little 2-bedroom condo that I could just lock up and travel and do whatever. And then 2008 happened. And because I've been in these markets on some level, since I was 10 years old, 1964, I knew at that moment that the system actually died. And it was just put on life support until they could finish out the new system. I personally do not think it's an accident, and especially if you read the 1996 NSA white paper on how to create a mint, and it's all about cryptocurrencies, right? So I personally do not think it's an accident that Bitcoin came out in January of 2009 and quantitative easing came out in March of 2009. Last numbers I saw in the US, 16% of the adult population had on some level had their hands on cryptocurrencies. That you need 3% for adoption, so they have adoption. Now, and they recently did a paper which was so entertaining, my goodness, because it basically said private cryptocurrencies bad, CBDCs good. I mean, it was so funny. It was laughable how ridiculous this is. But yeah, everything is in place. They have the Fed now. Everybody in America, and I'm sure that this is really more global, has an account. Whether they know it or not, an account has been set up. So you have a next crisis, people are freaking out, and we've been off balance for quite some time now, right? People are freaking out. Don't worry, we just put a whole bunch of CBDCs in your personal account, right? Now you've got liftoff.
Yeah. It reminds me, I think, was it Judge Dredd? It was a Sylvester Stallone movie where when he swore money was deducted from his account.
Well, that sounds about right.
Like
China showed us how, didn't they? They led the way, tested how far they could go. So
interesting. We'll need to have lots more of those conversations.
We do, because there's a lot to unpack in China.
Absolutely. Lynette, I tremendously enjoyed this conversation. You're the first guest to bring a prop. Fantastic. Thank you so much. You have amazing energy. Love to have you back on the program soon.
Would love to be back on.
And really appreciate your time. Thank you so much.
Thank you for having me.
Hold on. Where can we find more about you?
Oh, okay. Well, you can. I have 2 YouTube channels. One is on the economic piece, and so everything that we've been talking about today and more, and that's at ITM Trading. Or you can use my name, Lynette Zang, and I'm sure I'll come up. And the other site is called Beyond Gold and Silver, because everybody really needs to be as independent and self-sufficient as possible. And that means food, water, energy security, barterability, wealth preservation, community, and shelter. And so Beyond Gold and Silver that's what that's all about. We try and meet you wherever you are. I just finished for this event what we called our grip report, which is basically how to get a grip through the reset. And so anybody can call 888-696-4653 and get that free report that goes into a lot of what we've talked about today and more.
Perfect. We'll put the details in the comments below or in the description below.
Excellent.
Lynette, thank you so much for coming on. Really, really appreciate it. Everybody else, thank you so much for tuning in. We hope you enjoyed this episode. I did tremendously enjoy it. Make sure to follow Lynette on YouTube as well. Fantastic YouTube channel, lots of information. Runs through a lot of daily news and active news popping up left, right, and center. There's just so much to digest. She helps you understand it. Make sure you do it. Leave a comment, leave a like. What do you think? And make sure you subscribe. 85%, 90% of you are not subscribed to this channel that are watching. Please change that. It's just a click of a button. Either at the top right, bottom right, doesn't matter. Hit subscribe. Thank you so much for tuning in. We'll be back with lots more. Thank you.